Good morning, everyone. How's it going? Hope you all had a great weekend. It is half an hour before the open on January 22nd, and let's get ready for a really great and profitable week ahead. Let's see how we're opening up the week. In our futures, looks like we're doing pretty well. Little bit of a positive bias. NASDAQ is up significantly, about half a basis or half a percentage point. And it looks like Dow is about 20 basis points and the S&P about 30 basis points. So starting to get somewhat significant in S&P 500. NASDAQ is already significant. Dow is not quite there yet. So we do have a little bit of a bullish bias in the market. It's not huge. It's mostly in these NASDAQ stocks. So techs look like they're still leading the way. And there's a lot of interest in that sector still. Let's see if anything would put a damper on the enthusiasm in the market. So when we look at our economic reports, nothing today, nothing really tomorrow. PMI could, well, this one's not the it could have a small effect. It's not the major report. It's not this normal CPI PPI report. PMI is the manufacturers index, not the whole markets index or the consumers index. So PMI is not one that the Fed looks super carefully at, but it can give us a clue as to how the PPI might come out. Let's look at Thursday GDP. Okay, so the big numbers are going to come on Thursday. Durable goods, GDP, those are the ones that we're going to be paying attention to this week. Personal income outlays will be watched by the Fed as well. So later in the week, we're going to get some bigger economic reports. The first half of the week, we're mostly going to be driven by earnings, it looks like. So let's take a look at what we've got for this week. In terms of earnings in the S&P 500, I think we already sort of did this on Friday, so I won't spend too much time over here, but we're starting to bleed into the techs. We still have financials going on. The earnings are starting to broaden out. So this will be an important week for us to find out if the upward movement that we've been seeing in the indices is sustainable. And if I can't get charts, this could be interesting. Huh. Okay, let me try reopening this. Sorry, guys. All right, well, see if that will actually load up. We'll take a look at sectors first. And in terms of a long-term view, the sectors that are doing the strongest are, no surprise, SMH, XLK, XLC. So all the tech-heavy stocks, QQQs up here. Looks like XLF financials are not too far behind, and we are in the middle of the financials earnings seasons. So one thing that we want to note is the shape of the overall markets. So what I mean by that is the QQQ we saw sort of floated down, and we had a bounce near this MA200. And then we basically have been going a very steady slope upwards ever since the end of October. Same thing with the S&P 500. We were sloping downwards. We bounced a little below the MA200, and we've been going this steady movement upwards. So last Friday, I showed you guys a bunch of strong stocks. I said, hey, these are all looking very good, but a lot of them were only looking good since November or the end of October. And if that's the case, they're just following the market. They look just like the overall market. So if the overall markets break down, it's very likely that those stocks will also break down. So when we're choosing the nice, easy sloping stocks, we want to make sure that it's not because it's simply a correlation with the markets. So we want to see that movement upwards beyond since before the end of October. So if they've been doing it since September or August, then that's a good sign that it's a stronger stock. If the ones that just started in November until now, then we can't definitively say. We could probably say that it's more likely that it's because of correlation to the markets. So I would go into the stronger ones that have been showing strength for longer than the market has been showing strength. That was one correction that I wanted to make since Friday. Did we finally load up? Yes. Okay. If we look at the S&P 500, we did make that new high. We are moving towards this 490 level that I drew on here as a psychological resistance. As you can see, that might only take 1 or 2 weeks before we get to that 490 level. And then we have to start being very careful. If we look at these Keltner channels, 490 brings us a little bit above. Of course, these Keltner channels will continue to move up, but 490 will take us to about the +3 ATR level on the Keltner channels. And then we will have to just really start paying attention because there's a high potential for that pullback, either a baby minor one into the EMA 20 like we saw right here, or it could be a lot more significant into, so this was a correction back in September, October, well, I guess starting from the beginning of the year all the way to September, October, again, before we bounced. So we want to be very careful. Don't expect that we'll get a 9-month correction, but it could be like a 1-month correction or a few weeks correction. So we just need to be very, very careful over here and make sure that all our positions that we go into are really balanced and we have natural hedges or outright hedges in our account. If we look at QQQ, this is very much the same thing, stronger than the S&P, making new highs right here, but we had already made new highs over here. So historically, every time we make a new high in the markets, we will continue to move higher for a short period of time, and then we will get at least that pullback. So there are more and more reasons for this particular market to start pulling back. And because of that, we still want to follow the trend. The trend is up. It's been up since October. And we want to be careful that there could be corrections and pullbacks, just like there's this, so up since October. So we haven't had a real pullback yet. We had only had a baby minor one right here. So there's that pullback that we're anticipating back here, that everything just went sideways. Everything's getting pushed backwards and getting pent up. So as we're making these new highs, the chances of that pullback is just that much stronger. We just want to be very, very, very careful with that. In terms of, let's take a look at our day trading and see how we're looking. You can see that we're pretty muted. There's not a huge range right here. And you can even see right here, this is very unusual to see in the S&P 500, how the trading back here, even in the pre-market, was just very spotty for quite some time. It's a lot more smooth over here. It's a lot more choppy over and spotty over here. So where the market hasn't quite woken up yet is what I'm getting. We had a holiday week last week. And this week, we're starting to open up. And as the market starts to wake up more and more, as more participants start to come in, we'll see more and more smoothness right here. So we can't get too much, like we can't trust this information too much, this spotty information. But we'll draw some real quick lines over here, right there. That is pretty close to the previous close. It's a little bit higher. But so this would be treated as a region. These two are so close together, we would treat that as a region. I'll just keep that first one. And those right here, and these highs right here. Okay, those are the levels I'd be watching today. There is a upward bias in the market this morning. So if we break out of here with strength, I'd be looking for a pullback and then potential strong movement upwards. The range that we had on Friday looks like it was slightly increased range, but not too much so. So the high to the low was about 486. And if we go up another 6, that would bring us to about 488, 489. That's pretty close to our 490 region. So maybe not today, but starting tomorrow, we really want to start being careful with our long positions. Just make sure that they're really well hedged and your portfolio is protected. I think those are going to be the main takeaways. Is let's get a little more cautious. We are starting to put capital to work, like I said on Friday. And if we get a good confirmation today and tomorrow, that's a really good sign. And 490 may not hold. If it doesn't hold, round numbers are always big levels in the markets. So we don't have any, these are all-time highs. So we don't have any clues from history to give an idea where prices might pause. And when we get that, then round numbers become psychological touch points. So if we don't hold at 490, then there's a chance that we'll hold at 500, and then 510 is really far away for now. So it'd be unusual for us to just go straight up without a pullback and hit 510, but it is possible that we could hit 490 and maybe even 500 before then. Okay, so just watch out, just be very careful. Watch the overall markets or these indices very carefully for these resistance levels, 490, 500. And as we get closer to those levels, you want to put more and more protection in your portfolios. So that's it for this morning. Have a wonderful day, and I will see you in the aftermarket session.